New front is open in the insider trading investigation. The FBI arrested 5 people yesterday, and you may know by now that 4 of those taken into custody were tech company employees working on the side for an expert networking firm. Bit by bit, we're getting a sense of just how the government is building its case and where it's headed. For more on the probe, we welcome attorney Joel Cohen. Joel has both prosecuted and defended insider trading cases. He is currently a partner at Gibson Dunn Crutcher. Joel, you've had a chance to look at what was put before the courts yesterday. What conclusions can you draw about this case right now?
Well, it's interesting because this story has been covered in the last month as if it's something really new. And in some ways it might be new, but if the allegations are accepted as true, and I have no idea whether they are, but let's assume they are, it's really same old in a lot of ways. It's what they allege basically is that insiders in a company are tipping people outside the company with material non-public information. That's what's been going on for 30 years.
That is the definition of insider trading, but should it surprise any? I mean, it's not like anybody's figured out how to inside trade in a new way. It seems that the wrinkle here is that there's a middleman, right? These expert networking firms that form allegedly as a conduit for the inside information to flow from people at the companies who have the material information and the people who are trying to buy it on the other side.
And it seems, again, if the allegations are true, that this might be a build-around that has come in as a consequence of something called Reg FD, which came into effect in 2002 and required companies to make sure that they release information in a uniform way, that they don't do what's called selective disclosure. And it might be that as a consequence of that, some of these expert networks have begun to find other ways to get information from companies. Now, there's no reason to assume that most of them that exist aren't doing it perfectly legally.
Of course, of course. Let's just highlight for a moment some video that we got in recently. It shows a man named James Fleischman. He worked at one of these expert networking firms, Primary Global Research, out on the West Coast. This was filmed after he was arrested yesterday, and it just highlights one point that I want to make. The employees of Primary Global Research and the other, well, more importantly, actually, not the employees of Primary Global, but the people at the tech firms who they contacted were paid not very much money. In your experience prosecuting and defending insider trading investigations, is that normal? I mean, one of these guys, over a period of about 2 years, or maybe almost 2 years, only got $22,000.
You know, it's again, it's not abnormal because this is a form of corruption that's being alleged here, and corruption doesn't take a lot of money to skid the wheels and make things work.
One of the things that we've highlighted over the course of this probe, and also stretching back into Galleon, is the way that wiretapping has changed the game. When you see some of these quotes, and they're pretty extraordinary, in particular from the guy who only received the 22 grand. It really seems like, and again, I don't want to assume guilt, but it really seems like it's a much easier case for prosecutors to try when you've got a guy saying like, whoa, I hope this isn't being recorded.
That doesn't help, but on the other hand, you remember the Bear Stearns prosecution in my old district, the Eastern District, about a year and a half ago. You know, if you look at one side of the tape, it says one thing, and the other side says something else. But I agree, it certainly doesn't look good from the complaint.
Do you think, at the end of the day, it will make it easier for prosecutors to get convictions because of the fact that it's not entirely circumstantial evidence the way it used to be?
I think it will be easier when you have tapes that support the case. I mean, insider trading cases have always been plagued by the circumstantial evidence problem, although the courts have really gone out of their way to help the SEC and the U.S. Attorney in fashioning law that allows them to offer circumstantial evidence in.
All right, Joel, it's so good of you to join us. You can't imagine how much interest there is in this case. I hope you'll come back and see us on the Inside Track. Joel Cohen of Gibson Dunn Crutcher. We're talking about the insider trading probe.